Hello, David Moore, Equity Advantage, 1031exchange.com. I'm here with Robert Smith today, Peregrine Private Capital, and we're talking all things DST. So we've talked about a variety of things so far, but I guess if somebody wants to buy into one of these things, is it complicated? I mean, if I said, Bob, I want to buy into a DST, how's that work?
It's pretty straightforward, David. There are 32 active sponsors in the DST space, and the vast majority of these sponsors use the independent broker-dealer channel to distribute their product, meaning a syndicator goes out, finds product, does their own due diligence, brings those properties in-house, packages them for sale to investors through people like me. We're part of the independent broker-dealer channel. Our broker-dealer is Emerson Equity out of the Bay Area. And then those programs are evaluated on an independent third-party basis by a law firm to make sure the underwriting assumptions are reasonable. Then they drop down onto two broker-dealers, and they decide which ones to place on their platform. So you, as an investor, need to access the independent broker-dealer channel and representatives of that.
So I can't buy from my real estate broker?
No, you cannot. DSTs are securities, and so you need to be securities licensed to sell DSTs. And there was a big tug of war when DSTs were first created, late 90s, early 2000s. Is it real estate? Is it security? And the Securities and Exchange Commission came down with all 4 feet after 2008, saying it is a security and you have to be securities licensed to sell DSTs. So you need to access them through a licensed securities broker of some type.
So as far as if I come to you and say, I've heard of DSTs, Bob, what do you have for me? What are you going to want from me? And how do I get started with it? I mean, if I stumble across Peregrine Private Capital, what do I do?
Well, first and foremost, because DSTs are illiquid assets, meaning once you're in it, you're going to be there for the duration until management decides to sell the property. As such, DSTs are an educational experience, not a sales experience. So in our humble opinion, if you talk to someone, and there are lots of brokers out there selling DSTs that tries to sell you something rather than educate you with regard to something, you should run as fast as you possibly can in the other direction, because as an alternative asset, there isn't a ready secondary market. They're fairly opaque. There's a lot to understand about DSTs before you pull the trigger and make an investment as an accredited investor. So the first thing you have to do is try to access as much credible information as you possibly can online with regard to what a DST is, how they've worked historically, and who they're available through, and then find a relationship or attempt to create a relationship with someone that you're comfortable with that will educate you with regard to the product, the different types within the product, the externalities that are constantly at work on commercial real estate, on the commercial real estate space and valuations, and help guide you through that process. And
so we're looking for credible information, not incredible information.
No, credible information.
So
yes.
Credible information.
Yes, sir.
But as far as, if I come to you, you're going to ask me questions. I'm probably I'm going to have some idea probably what I want. I might say, gee, Bob, I want retail, or I want hospitality, or I want, hospitality after this last year might be a rough one. But, I'm probably going to come to you with some preconceived notions of things. And so what you're saying is a big part of this whole investment deal is the education, what's out there and what's possible. And then, I know you've got lots of history in the biz, so you're going to give sort of historical perspective too. And I think you've made several comments already today talking about the market where we are and in the cycle of ups and downs and going forward what we might be looking for. But I think that you and I have talked a lot over many years about the stability of the offerings. And what you represent. I mean, how do you decide what you're going to represent? And then as far as when I'm coming to you once again, do I fill out a form? What do you want from me as far as to understand my objectives and then steer me in the right way?
We want as much background information regarding you as possible, from both a financial and a personal standpoint, because everyone that's looking for replacement property in 1031 exchange comes to the table with his or her biases. I mean, it's not an accident that the majority of available DST programs on market at any one time are multifamily, and that's simply a byproduct of 2008 housing market crash. Didn't take a rocket scientist to figure out that the primary beneficiary of that was going to be apartments, because you had a whole generation of never should have been owners going back to being renters, and there wasn't enough product available, so supply had to catch up with demand. And in addition to that, and I think even more importantly, the majority of people that are considering DST as an option are coming from the sale of some sort of rental housing. Single family home, duplex, triplex, apartment building. So it's an asset type they're already familiar with. And obviously from a sales standpoint, that's a much lower hurdle for the broker or the salesman to overcome, selling you something you're already familiar with, as opposed to taking the time and energy to try to educate you with regard to other product types or property types that you're not familiar with. So we do the best job possible understanding your biases, your preconceived notions with regard to real estate, and then try to give you the best possible top-down approach on the industry, how it evolved, what's currently available, and what may or may not be topical going forward. But ultimately, you have to make the choice yourself. We tell people that there are two components to any DST investment decision. One's rational, the other's emotional, meaning you have to be able to look at a property or a property PPM and understand, appreciate, and be comfortable with what that property is, where is the tenant mix, all the surrounding dynamics, just be very comfortable with the program itself on a rational level. But it also has to work for you emotionally, meaning you have to be able to sleep at night, and if you can't line those two things up, you very simply don't do it. So it's our job to learn as much about you and what you're comfortable with, what you're not comfortable with, as possible.
So geographic location would be one of those emotional probably decisions, right? I mean, so I don't recall having any regional offerings recently, but it seems like every time we have had one, it's fully subscribed overnight with local people, right? Is that?
I think, that used to be the case.
Yeah.
I mean, historically, the majority of DST offerings, or there have been historically a paucity or a shortage of DST offerings on the West Coast, simply because the West Coast has been one of the most fully priced real estate markets in the United States.
Fully priced
markets in the United States, so it's difficult for large syndicators to find properties that work in the DST formats. And so you're right, historically, when a local offering did come to market, it was usually subscribed quickly. I think that's changing now because, as we mentioned in previous videos, the lion's share of our business is now people trying to escape the local market and the prohibitions that have been placed upon them from a rent control and tenant selection standpoint by state and local government. So now more people look much more favorably at relocating their assets to red states as opposed to staying close to home.
Yeah. So I want to bang back on this thing one more time with respect to buying from you. I mean, one of your big issues and the time you've been in business entitles you to be that is the education component, educating people to what is working different regions and asset classes, right? But as far as I want to stress, it's not hard to buy one, right? I mean,
No.
so it basically you're going to want, obviously you're going to educate me and you're going to give me an idea of different things, options that are out there. And let's say I pick one. How hard is it for me to buy?
From a paperwork standpoint, it's probably going to be a lot easier than any property you have, any property that you own wholly and have bought previously. As long as you're an accredited investor, that means you have to have a net worth of over $1 million exclusive of home equity. As long as you can read and write, you will fill out a set of subscription documents, and you will fill out a set of documents specific to the broker-dealer through which that property is offered. And those will be submitted for review and approval. That then makes it, if it's approved, that then makes its way to the property syndicator. They immediately begin working with your qualified intermediary, someone like David and Equity Advantage, and in 4 or 5 business days, barring any unforeseen mishaps, you're probably going to be closed and cash flowing. So
once again, the timeline, if we're like up against the 45th day, trying to find something, and so often you guys mark it as a fallback, but I would say that fallback's no longer a fallback in today's market. I mean, a lot of times it's the first choice is where we're headed right now. But if I do come to you at the 11th hour and say, hey, I need something, how long from your first contact, if I'm Johnny on the spot and I get you what I need, I mean, a week?
Probably max a week. I mean, it's going to take you probably an hour and a half to fill out the necessary, assuming that you've already chosen a property, it's probably going to take you an hour and a half to fill out the necessary documents, and then that is submitted to our broker-dealer for review, and that's probably going to take a day. And then the broker-dealer, if it's approved, is going to submit it to the DST property provider, and they will begin working with qualified intermediary, and that will probably take 4 or 5 business days to get you closed and cash flowing from soup to nuts, probably a week.
So this is not difficult, people. This is something that's, Bob's talking about the education process, which he takes pride in. He wants you to understand what's going on, but it's not a complicated thing to get into. I want to stress that. And how about the financing? I mean, do I have to disclose all kinds of stuff to you for the financing?
No, you have to fill out a financial statement that states you are an accredited investor.
But I'm not having to qualify for a loan.
No, you're not having to qualify for a loan. DST, 9 out of 10 DST properties come prepackaged with a bank loan. They're totally turnkey, so you don't have to qualify for that. The signatory trustee is the property syndicator of the DST, so no, you don't have to qualify for that.
How about loan to value? Because obviously, most of our clients have debt on the asset. Some don't. Depending on the cycle, we might have more or less debt, more or less need for LTV, loan to value. But what's up with that?
As previously stated, the majority of DST properties coming to market are encumbered by a bank loan, simply because the majority of people in 1031 exchange need to replace both debt and equity for a clean exchange. That being said, the minority of people have owned their properties outright, so there are a certain number of all-cash DSTs that come on market. But all DST programs differ in terms of the amount of leverage or debt placed on them. So our job is to come up with that property mix of DSTs that most closely approximates your debt replacement requirement in 1031 exchange, and that's fairly easily done.
So I want to stress that once again. I mean, a given offering is going to have a set LTV,
right,
but his job is actually take and look at what you've relinquished, the debt to equity you add on loan to value on that stuff, and get you taken care of on the acquisition. So I want to. That's one of my big pet peeves with 1031 is people often say, well, you have to replace debt in an exchange, and it's totally incorrect. Debt can go away 2 ways: one by adding cash, and the other is by going down in value. You go down in value, you've got tax exposure. You add cash, that's always possible. So you're going to work to get the LTV that you need. And I will just stress this fact. Every dollar you spend more than you want costs you $1. If you don't spend it, maybe it's 40 cents. So it's really important to understand to get into these things. It doesn't take a lot of time. You're not having to go out there and qualify for the financing. You're filling out accredited investor paperwork showing that you're able to invest in this asset or product.
Correct.
But as far as the loans and as far as everything else, it's non-recourse debt, correct?
Correct.
So, that's important for everybody to understand. These things are easy to get into. The toughest thing you're going to have, biggest decision is that property asset mix and what you're going to be comfortable with. And you made we'll get back to my next question in the next segment. But I just want to stress it's a simple process. It doesn't take that long. You've just got to fill out some forms, get them turned in. The biggest issue they're going to have is figuring out what kind of product mix they want, and your job's to educate them. And it's a good thing. It's going to take care of you, and it's not a hard process. I think the hardest thing most of the time is probably deciding on what you're going to buy, right? That identification process. Just like any other thing, is fixing the region, the type of asset you're going to pick up.
You're exactly right. It's the paperwork process is brief. The cycle through to being closed and cash flowing, and by way to note, DST properties immediately begin cash flowing on the day you close into them. There is no wait. All that is done quickly, and it's fairly easy. It's a clean process. That being said, the majority of time that you're going to spend or should spend is in educating yourself with regard to different property types in different markets and the dynamics affecting those property types and markets, and what kind of mix you want to come up with or have in the end.
So I want to stress, you're not just buying an asset or pool of assets, you're buying management.
Correct.
And that management component, I would say, in times like we're in right now, is probably the most critical thing. To be working with a sponsor that's been through ups and downs, been through a hard time, survived it, and is going to be relatively well prepared and well healed enough to survive the next down cycle, because it will come.
We tell people that, and everybody focuses on the property, but because this is a totally passive investment, meaning you're going from the I manage tenants or manage managers to the mailbox money business, where once a month, every month, you get a check, and hopefully you live happily ever after. As such, management is absolutely critical to the success of that property and your investment experience. We tell people good management, really good management, can oftentimes fix a challenged property. Bad management will almost always ruin a good property. So management is every bit as important as the property itself. And so not only do you need to do due diligence on the property, but you need to do due diligence on the people that are going to be managing that property for you. End of story.
So I think the first time you've got contact with somebody, you're probably dealing with somebody that's, a lot of these people are self-made, like we talked. The person's first investment house is a home that they outgrew, right? And then they snowball it into a variety of assets. And anyway, but for them to let go initially, it's sort of a hard thing. But what my experience is, whether we're talking TIC, DST, going in these passive investments, that first aversion to hand somebody else the keys, right? I mean, let somebody else deal with it's a hard thing. In our IRA 401k biz, people can manage an asset, but they can't, we say, get dirty on it. They can't go out and work on it. You can't paint it, you can't, swing a hammer on it, all that stuff. And a lot of times people's first reaction is, oh, that's what I do. That's what I like to do. But then all of a sudden I say, no, you cannot do this, period. It's a prohibited transaction. And they come back a few months later and they go, man, I just love this, because their whole life they've been working with it all, taking care of it, and it's always been on them. And now it's not. So I can imagine a lot of times people come into you and they're like so concerned about giving up control and this and that, and worrying about the management. If it's a great management company, I sort of look at, especially going to recessionary times, either the piano's on your back or somebody else's, right? And the piano is the old athletic term. It's like you're working through something and boom, you run out of, that acid builds up and boom, the piano hits you and you crash. I hate it, right? Total collapse. So we don't have that issue. You got somebody else to talk to. Somebody else is handling that stuff, and you're not getting the call in the middle of the night that the neighbor's done something. Now you got to deal with it. So I guess what I'm trying to say, and I'll sort of stop on this point, is a lot of times people's biggest issue with what you're selling them is their lack of control, which ultimately becomes something very positive to them.
You're exactly right, and that's whenever we get a call, got one before I came over here this morning, well, what can you tell me about DSTs? And the first thing we always say is if you are at the emotional give-up point from a management standpoint with regard to your property, i.e. you just don't want to do it anymore, then DSTs may be good for you. If you're not, it's not. End of story. And that's, we try to beat that home with everyone. You only come to DSTs when you're at that point in your life where you emotionally, you just don't want to do this anymore. If you want to stay involved, if you want to continue to try to control things or some things, then DST is definitely not for you.
So it's there. It's been there for 20 plus years now.
Yeah.
It's not hard to get into. A lot of times the toughest thing is the identification of what you're going to buy. But as far as getting into it, we're talking, I'm not going to throw a hard number out there because I know things change. But, you should be able to get it done in a week if you had to get it done in a week. But, my advice is always understand where you're going before you ever sell anything, so you're not having these time issues, because the biggest headache with any exchange is obviously time, the 45 days. But as far as your ability, anybody out there watching, to buy one of these is as simple as picking up the phone and calling Bob, right? It's not a difficult process. He's going to go through the options out there. He's going to listen to you, see what you want, understand the returns might not be as good as you could go out and do yourself, but you're not having to work on it. It's a passive investment, and I would throw out there in recessionary times, if it goes bad, it's probably you're not sharing the load on yourself. You've got a big company that's been in the business. If they're working with you, you're only working with a handful of sponsors that have been through good times, bad times, and my sort of attitude, at least in the marketplace right now, is I really don't want to see my clients go into some new sponsor, somebody that has not been through a bad time. I want them to work with companies that have been through it before and they're not surprised when it happens, because I think we're at a pretty frothy point in the market, and I've had through the years, clients have had problems with different assets, and that's never fun. So, I want them working with good assets, good companies, where they're going to be comfortable going through a potentially bumpy time, and that's why we're talking today. But once again, David Moore, Equity Advantage, 1031exchange.com, here with Robert Smith of Peregrine Private Capital, and we're talking all things DST. Thank you.
Thank you.